What's going on, everybody? Chef here. Welcome back to the channel. AMC dropping, APE rising. Based on the latest news that was released, we're going to talk about it in this video, as we are also just days away from hopefully hearing a final answer of what is going to happen, whether APE is going to be allowed to be able to convert to AMC. Is there going to be a revert split or not? I'm going to break everything down for you in this video, and then also talk a little bit about what could potentially happen with the shares outstanding and how price will react to that. We'll break everything down, guys. Let's get right into it. First off, this is the news. Okay, so a special master, Corinne Elise Amato, which was appointed by the court, has stated that after her investigations, she recommends that the court deny the objections to the settlement as set forth and therefore follow through with the conversion. Okay, so obviously this is a potential step in the right direction for those who do want the conversion to occur. But like I said, guys, there is nothing set in stone until we actually hear the ruling from the judge, which is still scheduled for just a few days from now. Okay, now this article also talks a little about who will benefit the most from the APE conversion. It talks a little bit about numbers. Obviously, guys, AMC, from a company, from a financial standpoint, will benefit drastically from this. Okay, an analyst from B. Riley says that it could be up to a potential of $16 billion in equity. That is so long as if every share is obviously dropped onto the market. Personally, considering they have, which is stated right here, about 4.7 billion. All right, which let's say it fluctuates about $5 billion in debt as of right now, and a cash position under $500 million, trying to drop all this onto the market, raising 16 billion in order to have roughly, I don't know, about 11.5 billion in overflow is a little bit too much for, I think, for a company to do, considering that inevitably this causes dilution to the stock. Okay, it says it right here, AMC common shares are expected to be heavily diluted. Now there's two thoughts that go into this, especially as AMC now is trading at around $4. Okay, so when we talk about dilution, when we talk about companies wanting to drop an offering, all right, when you're investing in a company, obviously, guys, there's two sides to this. My first immediate response is, as a shareholder, it causes a immediate automatic negative reaction, right? The algorithm pick up on it, the selling picks up on it, the shorts pick up on it, and it's an immediate negative reaction. Okay, on the contrary, okay, when a company wants to raise cash, that's kind of twofold. One, it could put them in a better position for the future. That's more of a longer term. For the immediate term, it does show that the company is struggling a little bit because they need to raise cash, right? So you think about a company that is thriving, that is, has consistent revenue, has a good business model, is continuing, to sell whatever their product, their service. They wouldn't need cash, right? Unless they're looking to change things for the future. Obviously, there are some of those, one-off situations. Okay, so you do have to think about those two different perspectives when you think about an offering, okay, or you think about dilution. On the contrary, when AMC was, back in, June, right, when it was already starting to ramp up, when it hit that higher price target, the overall share price was floating much higher than it is right now. The downside was a lot farther than it is right now. As you're seeing, AMC is sitting at about $4. Obviously, if this goes through, it'll probably drop just a little bit more as APE would continue to rise, making that, that spread a little bit closer. Okay, and we've talked about that numerous times. I'm not going to go over that in this video. However, this is where the contrary comes in, right? If they do this reverse stock split, okay, let's say AMC settles at around $3.50 from where it is. It goes from a 10-to-1. Follow me with me on this one, guys, right? Goes to a 10-to-1. Now it's sitting at $35 a share. Downside is a little bit greater. Now, don't get me wrong. Just because AMC is, let's say, sitting at $3.50 or $4, right now, doesn't mean it can't go lower, right? I've learned that the hard way numerous times. You're right? What is high can go higher. What is low can go lower. Okay, I've learned that trying to short, companies that are I think are just way overvalued. Nvidia, as of recently, before this most recent earnings, I'm glad I did get out of that one. And also trying to, buy companies that are just continuing to get beaten down. And obviously the market isn't, favoring that. We've all been there 100%. Okay, so don't think that just because it is low, it cannot go any lower. However, the downside is definitely a little bit different when you think about $3.50 versus $35. But let's look at this from a different perspective, especially as we are slowly seeing the market starting to just steady out, right? So we've talked about this, there's room for argument saying that we're in a bear market rally, we're in a bull market. I mean, technically this is another bull market. Do I think the macros warrant, a market that we were in 2020, 2021? Absolutely not. But like I said, only the future will be able to hold that. But we've seen some high growth. We've seen Palantir, we've seen Upstart, we've seen a lot of other speculative companies really get some ramping up. Obviously, there's a little bit of profit taking going on over the last few days, but we've seen some of that, right? We've seen some of that positive action, which would obviously be good for any speculative companies such as AMC following in some of these heavily shorted stocks. Okay. So let's take a look at what this could potentially do to the float, right? So AMC sitting at somewhere just over 500 million shares as of right now. APE is sitting, I've seen a couple different figures. Okay. I've seen, 955 million after what was dropped. Okay. You look at the conversion cast, right, which show that there was 978 million votes for the conversion and 124 against, sitting at somewhere around 1.1 billion for the float of APE. Let's just put that number at 1.1 billion. Okay, we'll round it at 1 billion for APE, about 500 million for AMC, puts the new perspective shares outstanding at 1.5 billion, right? So we're going from about a $500 million, shares outstanding float. Okay, those are two different things, but I'm going to use them a little bit, intermittently, about 500 million all the way up to 1.5 billion. Okay, follow with me still on this one. We're talking about now the 10-to-1 reverse split. So now you've got 1.5 billion, $3.50 roughly per share. Now we're going down to 150 million, $35 a share, right? So 1.5 billion, 350 a share, 150 million, $35 a share. Okay. What I did was took a $10 bill. Now I've got 10 $1 bills, right? Still the same measurement of a total of $10. Okay. So let's take a look at how the shares outstanding and float and the way that price moves can change. And I'll talk about this, right? So let's talk about Apple. The reason why I'm talking about Apple is because it has a massive number of shares outstanding, about 16 billion, right? Now, if you follow Apple even remotely closely, you know that for this stock to have a range of more than $3 or $4, okay, or more than 2%, doesn't happen that often, right? We're never seeing Apple, obviously earnings of it, closes at 150, gaps up, opens at 160, but we're never seeing it open, right? At 9:30 New York time, open at 160. And by the end of the day, it's at 175. It just doesn't move that much. Okay. And the reason being for that is because of the shares outstanding and because of the overall market cap. The higher the shares outstanding, the more it is going to take for that to move, right? So let's look at one, differently that has some wild swings. We'll see, open and then it'll rip up, 6, 7, 8%. We see it quite often. We even just saw it the other day. Tesla moves a lot more violently, right? Shares outstanding, much less, okay? 3.17 billion, a lot less than at almost 16 billion. Now we're talking about the difference between shares outstanding and float. The only difference is shares outstanding includes all of the shares, obviously, that are outstanding. Public float restricts what is either restricted or preferred or held up and not accessible to the public. Okay, that is the only difference between those. But the point behind all of this is the lower the shares, the lower the float, the easier it can be to be able to, one, trap shorts and be able to really move the stock price. Okay, so if we do get that reverse split, okay, you are decreasing the float all the way down to potential about 150 million. That number will be a little bit more accurate, obviously, if it does go through, but somewhere around that range, meaning the ability to be able to move the stock price is a lot easier, right? So you think about all these companies, and I know you guys have heard of them, and maybe you haven't, you've just been following the tickers, back in 2021, 2022, but you think about some of these companies, these biotech companies, these Sens, these, Jesus, it's been so long. I feel like I can't even remember it anymore than Sens, but we talk about these low float runners, right? And you see these massive squeeze where they move 100%, 150%, 200% in a day, right? And that is obviously when the float is tighter. When the float is massive, it takes more to be able to move it, right? So obviously, if this convergence, does go through between APE and AMC, the dilution is never an immediate benefit for your shareholders. Okay, the reverse stock split obviously you're looking to artificially be able to raise a stock's value, right? The perceived value, because the market cap stays the same, but the perceived value saying, oh, it's a $35 stock, not it's a $3.50 stock, changes. But that float, having that lower float, if we can continue to get some action on this, obviously that's when things change. So guys, that's it for this video. I'll see you in the next one.